$2,000 of passive income by selling just one single call option. I'm full-time institutional crypto trader, and my public options portfolio has reached 60% of annual return. And by the end of this video, you will be able to trade like institutional investor. So let's go. So what is Bitcoin covered call trading strategy? This is very simple strategy where I already have a Bitcoin and I'm ready to sell Bitcoin at the higher price. And for my readiness to sell Bitcoin at a higher price, I receive my passive income. And let's take a look at the real example. So here you can see the chart of Bitcoin. Bitcoin is trading right now at the price above $108,000. And let's assume that I have one Bitcoin, which I would like to sell at the higher price, at the price of $115,000. In this case, I can go to the spot market, select the quantity of one Bitcoin and place a limit order with a price of $115,000. And wait until the price of Bitcoin will hit this price target. But in this case, I don't receive any passive income. But with options, I can place the same price target of $115,000, at which I will be ready to sell one Bitcoin, and for that, I will get a passive income. And no matter what the price of Bitcoin will be, this passive income will belong to me anyway. And let's take a look how much premium I can get if I would like to sell Bitcoin after 1 month at the price of $115,000. And for that, I receive a premium of $2,150 by selling one Bitcoin. And no matter what, this premium will belong to me anyway. These premiums vary day to day. And if you would like to be up to date and find the best opportunities in the cryptocurrency options market, then you can join my free Discord channel. There you can find the market updates, the most important news, and also chat with me. So it's absolutely free, so join my Discord channel. The link you will find in the description below. If I don't want to sell one Bitcoin, I can also trade smaller quantities of Bitcoin. For example, the smallest quantity is equal to 0.01 Bitcoin. And in this case, if I'm ready to sell 0.01 at the same price of $115,000, after 30 days, I will get a premium of $21. And this is more than 20% of annual return just for my readiness to sell Bitcoin at the higher price. And also the same strategy could be applied with Ethereum or Solana options. I have on my balance one Ethereum. And now I will show you a real life example how to trade a real covered call trading strategy on Bybit. So I will go through all steps and you will see how easy it is. And after a few steps will be done, the passive income will be already available on my balance, because all the passive income premiums I receive upfront. So that means my balance of USDT will increase immediately after I sell call option. And this you will see very soon. Here you can see a price chart of Ethereum. The current market price of Ethereum is equal to $4,300. And let's assume that I would like to sell one Ethereum at the price of $5,000 after 1 month. So that means if the price of Ethereum will hit $5,000 after 1 month, I will make a profit of $700 just from the price increase of Ethereum. And also on top, I will receive an option premium, which is basically my passive income for my readiness to sell Ethereum at the price of $5,000. And even if the price of Ethereum after 30 days will not hit $5,000, this premium will belong to me anyway and is my passive income. And let's take a look how much of passive income I can get. But before that, a very quick summary. So I am ready to sell one Ethereum at the price of $5,000 after 30 days. And this information we need to sell a call option, because $5,000 is my target price or a strike price, And 30 days, this is time to expiry of my option. And now let's sell a real call option and receive this passive income. So first of all, to sell a call option, we have to open the option chain. And for that, we have to go to the trade and options. I would like to sell Ethereum options, so I have to select Ethereum options. And here you can see the option chain. So first of all, we have to find the right expiration date of the options. So each option has its own expiration date. And as I said, I would like to trade options with 30 days until the expiration. In my case, this will be the end of September 2025. Here you can see time until the expiration date is equal to 27 days. So almost 1 month. And this is exactly what I need. And now let's take a look at the option chain. So first of all, I'm going to disable some parameters on the option chain to get a better overview. For example, I don't need 24 hours volume trading, open, and it looks already much better. In the middle of the option chain, you can see all the strike prices. And this is basically my target price if I would like to sell call option. On the right side of the option chain, we can find all put options. And by the way, if you would like to know the strategy how to buy Bitcoin or Ethereum at a lower price and also for that receive a passive income, you can watch my full step-by-step guide how to sell put options. The link for this video you will find in the description below. On the left side of the option chain, we can find all call options. And now we have to find the strike price, which is equal to $5,000, because this is my target price at which I would like to sell Ethereum. And now we have to focus only on this specific line. In the middle, we can find the fair value of this call option. From this price, I can understand what is the theoretical value of this call option. The red price is ask price, a price at which you can buy call option. But because we would like to sell call option, we have to take a look at the bid price, which is a green price. So, and that means for my readiness to sell 1 Ethereum at the price of $5,000, I can get a premium or a passive income of $170. And no matter what, this premium will belong to me, even if the price will not hit $5,000. And I will show you all different scenarios that could appear at the expiration date, and also what happened if the price of Ethereum will hit $5,100. And because options are cash settled, it's very important to understand what will happen exactly in this case. So that's why watch this video until the end, because this is very important. And now let's sell this call option and receive the premium. So as you can see, my balance of USDT is equal to 0, and after I sell call option, immediately I receive the premium and my balance will increase. So let's sell a call option. To sell a call option, I have to click on this strike price, and here I can see the trading window. On the left side of the trading window, you can find the order book and the price at which I can sell immediately 1 call option. Here I can see also the theoretical value of this option. And to sell this option, I have to click on the sell button, select the order type, for example limit order, and quantity of call options that I would like to sell. So 1 call option is equal to 1 Ethereum. The minimal trading size is equal to 0.1 Ethereum. So because I would like to sell 1 Ethereum, I have to trade 1 call option. And now I have to select the price at which I am ready to sell 1 call option. And I select the best bid price. And then I have to click on the sell button. And here I can see the confirmation window. And I click on confirm button. And it's done. And as you can see, even at a better price. And here I can find my open position. So I sold 1 call option, which is equal to 1 Ethereum at the price almost $118. So this is my passive income that I receive minus the trading fees. And this premium is already available on my balance. And now let's take a look at my USDT balance. And here you can see my wallet balance is equal to 116 USDT. And now let's take a look what could happen after 30 days and scenario when the price of Ethereum will hit $5,100. And by the way, if you have questions and you would like to learn more how to trade crypto options and earn passive income, you can book one-on-one session with me. The link you will find in the description below. And now let's take a look at the different scenarios. So here you can see the same Ethereum chart and the time when the option will expire, so at the end of September. And the following 4 different scenarios could appear at the expiration date. The first scenario, the price of Ethereum at the expiration date will be relatively unchanged. In this case, I will be not able to sell Ethereum at the price of $5,000. And in this case, option will expire worthless. But as you can remember, the premium will belong to me anyway. And in this case, I can sell another call option and receive the premium once again. In the second scenario, the price of Ethereum at the expiration date will be lower than the current market price. In this case, also as it was in the first scenario, I am not able to sell Ethereum at the price of $5,000. And in this case, option expires also worthless. And I can sell another call option and receive the premium once again. In the first scenario, let's assume that the price of Ethereum at the expiration date will be equal to $4,800, which is still lower than the price of $5,000. And as a result, option also expires worthless, because I am not able to sell Ethereum at the price of $5,000. And in this case, I will sell another call option and receive the premium once again. And now let's take a look at the last scenario. So let's assume that the price of Ethereum will increase and at the expiration date will be equal to $5,100. And now we have to take a look and more carefully at this specific scenario, because this is very important to understand what exactly happened and how to get profit. At the expiration date, in this case, my call option will have a loss of $100, or the difference between the market price and the strike price. But don't worry, this is not exactly the loss, and I will show you exactly why. And let's take a look. So as I said, the strike price is equal to $5,000. The market price of Ethereum at the expiration date is equal to $5,100. As a result, option has a loss of $100 at the expiration date. And now let's take a look what happens with my one Ethereum that I keep in my wallet. So the price of Ethereum at the expiration date is equal to $5,100. As I sold call option, the market price of Ethereum was equal to $4,300. So that means the profit is equal to $800 from price increase of Ethereum. And as a result, my total profit is equal to a profit from Ethereum position, which is equal to $800, minus the loss from the option, which is equal to $100. And as a result, the total profit is equal to plus $700. And this is exactly the difference between the market price of Ethereum when I sold the call option and my strike price of $5,000. But which steps I have to do exactly in this case? At the expiration date, I have to sell one Ethereum at the market price of $5,100. So I go to spot market and sell one Ethereum and receive $5,100. But because my sold option has a loss of $100, my total account balance in this case will be equal to $5,000, which is exactly the same as my strike price of $5,000. But don't forget, in addition to that, I have my premium, which is equal to $116. As a result, my total account balance will be equal to $5,116. And one very interesting point. And as you can see, because I received the premium, this premium increased my average price. And in this case, my average price is even higher than the price of Ethereum at the expiration date. And after I sold Ethereum and received the USDT, I can buy Ethereum at a lower price. And also for that, I can receive my passive income. And if you would like to learn more about the cryptocurrency options, you can watch my next video. See you Bye!